we are more used to it. So we will have on December 1. We have the owner, Arthur Lodge, actually invested how much? $56,000 cash and 50,000 office equipment. So we will have debit to cash, and that is 56,000. Then you have a debit to office equipment. And that is 50,000. And then you will have your, so you actually, if you notice, I have your chart of accounts given on the side there. Let me see here. Okay, so all of you make sure that we have the chart of accounts given on the side. So this is Arthur Lodge Capital. Arthur Lodge Capital. And this is going to be 106,000. So this course, as I said, is more about how to set up and to see what are the flexibilities when you set up a system. Okay, that's accounting systems, and it basically what it does is we will go through some data, and in there they will actually ask you. Yeah, go ahead. Lisa, you want
budgeting though? Yeah. This is not budgeting. This is strictly just seeing what our journal
this
entries
is
look
absolutely.
Like, right?
It has nothing to do about anything else except setting up Sage 50.
Okay.
And to set up all the specialized modules. So you will have the general journal module, you will have the accounts receivable module, you will have the accounts payable module, they will have the payroll module, and you will have the inventory module. So there are 5 of them. And how do you go about basically setting them up so that we become more efficient in the sense we don't have to really make general journal entries, debits and credits. We actually just make sure that we can just call a client, put the amount and put the account. Sometimes the account is already defaulted and you just save it. And then the same thing with your, you did your preparing the documents. You have the documents already given to you, the invoices, you have your sales invoices, you have your purchase invoices, you have your inventory, you have your, so all those are given to you. You first thing you have to do, you have to set it up. I mean, you have to have basically when you set up your receivables, you will be given all the names of your clients. And if your trial balance, let's say you have an accounts receivable balance of $5,000, you have to make sure that all the invoices for those $5,000 are then, after you set up your names of your customers, they have to be entered in there so that it balances with your trial balance with your general ledger.
Okay.
Same thing, you'll be given your suppliers' names and the amounts which we owe them. And how do you set that up? And then after that, you do not really have to worry about doing debits and credits. It actually does it automatically for you. Why? Because we set up the link accounts. You remember the link accounts?
Yes.
Those link accounts, for example, when you're invoicing a client, all you have to do is to put the amount, and the taxes are also, we set up the taxes. So automatically the taxes are calculated. And once those are calculated, the only thing you need is what revenue account are you actually going to, and even that, you can default that account. If you just have one revenue account, you default it in every customer. You don't have to put the account number, you just have to put the amount. And it automatically debits your receivable and credits your sales. And for receipt, The only two accounts you need is debit to receivables, credit to cash, right? And so you don't even have to do that. All you do is you call the client, and because you got a check, and you just you just go and you click in that line, and the amount comes in for the client, and you just say process it, and that's done. Debit to cash, credit. Why? Because we set up the system in a way you don't have to do the account numbers and the debits and the credits. So all the things for how do you add accounts, how do you delete accounts, how do you put in your check numbers, how do you put your invoice numbers automatically. So those are all in there, except before we do that, we'll just go over this, and then slowly we'll take this, and then we'll do just a general journal setup of this on your Sage 50. And then after that, I will take you through so that we can actually feel easy about it. You understand? Because it's not very easy to remember how you're going through you'll feel much easier once you have set up the basic Sage 50 file. You understand? So let's carry on with that. So if you're wondering what this course is going to be all about, it's all about the setup, and I will give you again the same thing. You will get all these pre-tests from me so that you get tired of that, okay? But I tell you, I'm sure now you realize that even after those pre-tests, you still had a little hiccups there. And that's why I keep on telling you that, look, it's so close to what the exam is. I mean, you should really, if you had not done it, it would be much more difficult. So, but don't worry about it. As I always say, I'm always there, okay? So it's not as if we are here to make sure we'll take off marks and stuff. No. It's a learning process, and everybody learns. And once you are in a company, you learn it while you're working. But you have the understanding of how the systems work. That's all. I can actually set up a system and give it to you, but you will not understand it as to what it's doing. Why are we doing this mechanical device, linking accounts and doing that? Because I'll have to make you understand how the software commands actually they do the same thing as you would do with a debit and a credit by entering it. But there we set it up in a way with accounts that all you have to do is put the amount, and it debits and it credits. If you are in a receivable module, you don't really have to do a debit and a credit. It should do it for you. But to understand how it does it, because if you make a mistake, then you have to go back the same way you went in. You have to go back and take it out. So anyway, so we will, as we go along, you will see, I will keep on explaining to you what every setup does for you. And then you can actually relate it to your journal entries. It does it for you in those general ledger accounts automatically for you, okay? So let's see here. So this gives you a little bit of a base again. So sometimes we get rusty on this, so we'll just do this. It should not be that difficult now. Prepaid, 10,500 for 3 months rent in advance. So we go prepaid rent. You can do it with me if you have the thing there, and you'll be fine. And you have cash. And you can, again, as I always say, you can stop me and ask me what you want. If you don't understand something, I'll tell you again. So this is on the 4th. Any entry, if you don't understand, just let me know. This is office equipment. And office equipment is 18,000. And then you have office supplies. See, these problems I have, they are not very complicated. So everyone gets a basic idea as to what we are doing. And then we have on the 8th. So if you notice here, up till here, I mean, because we are with these are basic um, problems for learning. If you notice, I'm setting up my business here. Take a look. So I open an account. I also bought some computers and stuff, which I brought with me in the beginning. And then I had to rent a place in order to run my business. And then I bought more office equipment and office supplies to run my business. And now I'm saying, okay, I'm ready. So if you are wondering the sequence of these entries, which you see, which probably nobody really pays attention, but I'm just trying to show you that this is setup of a business. Very basic. You understand? I mean, you have to have an office, you have to have computers, you have to have papers, pencil, erasers, and you have to basically make sure you have insurance you can take later. But here, now I'm ready. So I asked some people that I can actually do the work for them. So my clients came and I did some work for $5,200 cash and 5,200. And this is, I use this, the name of the account I use for a service. What is this?
Service fees earned.
Okay, service, yeah, because I cannot see it here because I have your thing there.
It's a 401.
Yeah, okay, service fees earned. And this is 5,200. Now, okay, so this is my first transaction with my customer, and it says on my invoice received. Okay, so here we have basically receipts from the bank, receipts from Bureau en Gros, and I brought this thing in. Then I have a check stub which actually says paid 3 months rent in advance. So these are all documents. Then there is Bureau en Gros, which actually I bought these things from, and I have a receipt. And they said because we deal with them or they know me, they said okay, you can pay us in 30 days.
Good evening, everybody. Good evening, Tariq.
Good evening. So now we have the first client, which actually I served, and I got $5,200 right away from this person. Another customer came, and these are my invoices. And when you say cash, that means on the receipt it says received. So then we have on the 8th, this is again another invoice I gave to and this customer we actually set up the client for doing some work on credit. So I completed the work for this person on accounts receivable because this person I allow to give me the money in 30 days. So it's for 26,800. And again, it's service fees earned. So copy and paste 26,800. So far so good. Everybody's okay. No problem. But all I'm saying is if you take a look at the documents, these are documents, you make sure that you understand as to why this always the sequence here is like that. So because we are just starting the business.
Fees.
Pardon?
It wouldn't be unearned fees. It's service fees earned because there's
no, yeah. No, unearned is when somebody gives you the money in advance. So at that time,
I had a little blank here.
Because you haven't done the work, right? So that's not your money. But if they say did the work and received cash, that basically means you've already earned it. So you cannot really call it unearned. Unearned is a liability because if I give you the money now and you haven't done my work, then I can turn around and say, okay, Lisa, give my money back. You understand? Okay. So it's not my money yet. So in other words, if you have a business, you can actually have cash coming in after you finish the work, right? Sometimes people give you the cash before you do the work, and sometimes you do the work on credit. So those are the three types which we actually have. I don't know in this one if we have unearned or not, but that's what unearned means. Unearned basically means if the money comes in first, so you write cash, but they said do this work for the next month. Then you write credit unearned. It's a liability count. All right. 13th. paid the accounts payable created on December 4. And so this will be accounts payable. And that is 20,400. And paid, the paid word is cash. So copy and you credit your cash, and this will be 20,400. Okay. And we have the 19th. And that is your premium on insurance policy. So you debit prepaid insurance. And the prepaid insurance you have is 10,400. And credit cash, because you paid 10,400. Then you have the 20th, received cash 4,000. Okay, you see this here? This is what we mean by the unearned. Received to, so 20th. Debit cash, right?
Mm.
But have you finished the work?
No.
No. You see, it says received cash 4,000 for work to be completed. So this is not my money then.
This is prepaid,
This is unearned.
unearned.
Yes, this is unearned. Because look, it has to be completed by next year. Okay, this should be 26, okay? Where is my 26? No, it's here. Here, because I think I gave you the year is 25, no? On top, December 25.
Yeah.
So this should be change it when you see it. So cash and unearned, what's the name of the account? Unearned
Unearned fees, it says.
Unearned fees, yeah. Unearned service, okay, we can just write unearned fees.
Service fees unearned.
Yeah, unearned service fees, does it say service fees? Anyway.
This is how it
It's
is
only
written.
one, we only have one account, so it doesn't matter. Unearned fees, 4,000. On my chart of accounts or in my general ledger, it says unearned fees here. Okay, so again, it's okay. Everybody is understand now when it is unearned. Look, accounts receivable is not unearned. I did the work and then I send the bill. I did the work and then I got the cash. Here it says I got the cash first. So obviously I haven't finished the work. So 22, you have cash coming in, okay, for the work we did on, so 50 payment for the work on the 12th. So you see here receivable, now we're getting the cash for that. And so 15,600 and accounts receivable. So if those of you who still have some doubts about this, you can ask me, because this was, I cannot write fees earned because I already wrote fees earned here. You can't have it twice. It is only my receivables being received, so receivables are going down. Okay. Then we have the 24th. So I again have the accounts receivable. And how much is that for? 3,800. And this is service fees. Oops. Service fees earned 3,800. And then we have the 28. So the owner is withdrawing money. So obviously we know it's called withdrawals, a large withdrawals. A the large withdrawals. So make sure, sometimes they call it drawings. I don't know if you remember, but we have this in your last class, we had that drawings that I think they wrote.
I don't think I see
right.
drawings here, though.
Yeah, 10,000. Pardon?
I said, I don't think I see drawings. Was it there?
No, in
Okay.
it's withdrawals, but it's sometimes they also call it drawings.
Mm.
Like the last course we did in that chart of accounts, it didn't say withdrawal, it says drawings. So it's the same thing. That's all I wanted to tell you, because sometimes people do not really they get confused with that. So 10,600. And then we have purchased $3,400 additional office supplies on credit, and that's on the 29. Office supplies. $3,400, is it? Yeah, 3,400 on credit. So obviously it's accounts payable. All right, and then 30th paid 920 for utilities bill. 30th paid, so we will have utilities expense. And 920 and credit cash. 920, and then we have paid wages 1,500, and that's on the 31st of December. So wages expense. And that is our 1,500 in cash. 1,500. So now I want all of you to make sure that you understand you're now on 31st. Okay. Okay. Because people seem to forget that once you reach here, it's not the first, because you can't get you can't do anything from the first. We are on the 31st, so you go to the second. So as I told you before, we actually imagined that our 30-40 pages for the month like this. So obviously, I cannot really just go through the 30-40 pages to find out. So when I close the shop on the 31st, I would like to know whether I made a profit or a loss from all these transactions I did for the month. So now the process starts to refine this raw data. And these 30-40 pages will then become 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about 14 balances, because I have all the other accounts in there for after adjustment. So in other words, we call that posting. And basically the first step, which is your recording, which is done in the journals, which are books of original entry, are basically from the documents. The documents are filed away. And once the documents are filed away, all the data is actually here. Now I don't have to look at the documents anymore. In case I need it, I can go, because we have a very good filing system where we file all our documents. These are all documents, as I told you before. Nothing is a statement anywhere you will go. They will say, well, where did you take this accounting with? That we have to give you statements. They're all written from documents. They're representing all documents. So when you say paid, it's your check stub there. So when you say completed a project for a client, it's your sales invoice. All this when you say I did the work. Received cash. This is the check from a customer. Received 15 as a partial payment. Also, there is money or check coming from a customer. I gave my invoice. Here it's a check stub. We said this is for personal withdrawals or personal use. Purchase additional office supplies is from Bureau en Gros, and the utility bill is from Hydro or maybe Rogers, or doesn't really matter. And paid wages is my check, which I have written for my employee. So just to reinforce your understanding that all these things which we do here is to make sure, because we cannot give you 20 pages of documents, which you actually did in your first or second course or third course, preparing invoices. And so the whole idea here is that as you go to the next classes, they should refer back to what you did in the previous classes, because they're done step by step, or they can let you, but that has to be emphasized by teachers. And that's why I know a lot of times the teachers do, or they do, but they have to do more than once. And so once you are on this, you are on the 31st. So now I'm going to take all of this data and summarize it into my general ledger accounts. My general ledger, again, I will repeat, it's books of original entries, one book anyway. And it is arranged, make sure you know the structure of your general ledger is exactly according to your chart of accounts. What does that mean? That means every page for each account is arranged in the same way as your chart of accounts, and any account with the designator number 1 is an asset account. Any account, any page with an account number with a designator 2 is a liability account. And every page in the general ledger with a designator 3 is a owner's equity account, and then you have services with the 400 is your designator. That's your 400 account, and then all the rest is 500 and 600. But we are not using the expense, your costs, because we are just a service company, and as such, the largest number of accounts are basically expense accounts, and the largest expense account is payroll in a company, by the way. Okay, just to give you an idea. So take a look here. On top of this page, I have given you these numbers. Try to absorb this. Try to remember this, because it actually makes you very, very structured. So you do not really make a mistake between accounts, because they're always going to be like this. Okay. So once you are here, I close the shop. And for learning purposes, I'm saying that before tomorrow morning, I will make sure that I find out whether I made a profit or a loss. I mean, not that you do it that way, but the cutoff point is always going to be the last day of your month, because we're assuming we are still doing monthly statements, okay? Because that's what companies normally do, because they don't want to do a whole year or 3 months, because then they miss out. People leave jobs, new people come in, and that's such companies have difficulty in trying to see for some of those expenses or for some of those revenues. So let's do the posting. So the posting takes place. You take everything from your journals and you put it into the respective account. So the first one is cash. So you go to cash, you go 1. This is the first. And you also write, okay, so here this is December 1. And where is it coming from? From journal page 1. If it's a sales journal, it will be SJ. If it's a cash receipts journal, it will be CR1. If it's a cash disbursement, CD1. If it's a purchase journal, it's going to be P1. So general journal is J1. And we said we debited 56,000 came in. Update the balance. And as I said, you can write DR and CR for purposes in the beginning, because what happens is sometimes you don't realize, if you have no debits or credit, when you're doing your trial balance, you don't know where to put it, because when we are in the learning process sometimes. So I'm just going to put it just so that you people are okay when you later on, you don't have to put it. Okay. But I'm just saying that I do put it because I'll just do it like this so that I don't have to keep on writing again and again. Okay, so here you go. So we go back and we said, where did you post, which account did you post to? It says 101. And now, a lot of times students, maybe if you are in a class where they're asking you this, don't write your account numbers here right away. Do it exactly one by one the way I'm asking you to do. Because the danger in writing the account names first here, numbers here first, is because when you're posting, you can miss out one and then it won't balance. And people, most of the time, students don't listen to this, but I can assure you, then you will have a big problem to find out because you're learning, so you don't know really how to find out where that can be. So next one is office equipment. So we go to office equipment, and that is 50,000 on the first office equipment here, and this is December 150 J1 journal coming from journal page 1, and that's 56,000. Update the balance 56. Put a DR, and now go and write, where did you post this amount? You posted it in your office equipment, which is 163. So what happened is, let's say you have you are on I don't know, in one of the pages 3, 4, 5. I mean, it can be many pages because once you start the accounting, then these pages keep on finishing. You keep on inserting new pages here. So let's say it was J50 here. And you say, okay, this entry came from J50. So you can go to page 50 here on this so that you can find, and then you can see as to what was that entry, by the way. So this is called posting references. So PR, they reference it here where you posted it. They refer to here where you posted in the general ledger. So once you go to 163, you know this amount was posted in 163, but if you want to know where was this entry, so you can go from J30, J40, whatever is written here, and you go and you can find out the full entry here. It's basically the integrated accounting, which is Sage 50 does it for you. It can recall entries anyway. And now we will go to a lodge, and that'll be $106,000. So this is December 1, and this is J1, and this will be 106,000. And the tab 106 tab, you can do CR and come back and put 301. Okay. So then we go prepaid rent 10,005 debit, and this is on the 2nd. We paid rent on December 2nd. J1, 10,500. Debit 10,500. Update the balance 10,500. It's a debit. Go back and put 131. So this way it becomes easier, and it's much easier to learn it manually, so that then you start to understand the mechanics or mechanical system, and credit your cash on the 2nd. So here you have to be careful. Your cash, and that is December to J1, and credit by 10,005. Now people have difficulty sometimes. You see, I have 56,000 is a debit balance. and I credited by 10,500. So debits are still higher than the credits. And so make sure that your balance, which you write here, is a debit balance, not a credit, because this is another place where people don't have, they make the mistake. So this is equal to this minus this, enter, and it is a debit balance. Debits are higher than the credits, so the balance left is a debit balance. Okay, and go back and put 101. And if you don't understand, just ask me. I can explain to you again, because this is the few places where I know students they get confused. That's why I keep on explaining to you. Office equipment 18,000, and the office equipment is on the fourth, 18,000 debit, 18,000 on the fourth, J1. And this becomes 74,000. Okay, 8 and 6, 14. And this is a debit balance. Go back and put 163. And you go office supplies 2,400, office supplies 2,400, and tab 2,400, tab DR, and then you go J1, and the date is the 4th, and go back and put 124.
Tarek,
Yeah,
the office equipment, is it 50,000 or 56?
this one. Oh, hold on. Yeah. I think I made a mistake here. It's 50,000. That's right. Thank you.
I'm just asking, so I want to make sure my balances match
Yeah.
yours, that's why.
No, it's okay. That's why I'm saying you can do it at the same time, so that if I make a mistake. Okay, thank you.
Beautiful, thank you.
Okay, and all right, and accounts payable 20,400. Accounts payable 20,400 credit, and 20,400, and this is CR, and you got J1, and this is on the 4th of December. Go back and put 201. Okay, then you have debit to cash. So remember, debits and debits are added in the assets. Debits and credits are deducted. The running balance is the higher amount. Credit and credits are added in the liabilities. Credit and debits are deducted, and the running balance is a credit balance, which is the higher amount. Always, assets are always debit balances. Liabilities are credit, capital is credit, revenues are credit, and expenses are always debits. So in case you can, in a way, you can keep that in mind and memorize, because later on you start to understand as to how the system is working. So here's a debit of on the 8th of $5,200. On the 8th of $5,200 debit, and debits are added. Now here's the cash which have balance. I have it. Then I got more. So obviously it's 50,700. $50,700, and we go back and put 101, and fees earned 5,200 on the 8th. 8 J1, and credit 5,200, 5,200 CR. Go back and put 401. Then you have accounts receivable 26.8 on the 12th. On the 12th, J1, 26.8, debit. Tab 26.8. It's a debit balance. And go back and put 106. And then we have on the 12th fees earned 26.8 on the 12th. J1 26,800. Okay, so we have this is equal to this plus this, enter, and this will be a credit balance. And go back and put 401, 401. And now they go accounts payable 20,004. So that'll become 0. This is on the 13th. Accounts payable on the 13th here, tab, J1, tab 20,400, debit, then 0. And then we go back and put 201 here. And then you have cash 20,400, credit 20,100. And this is on the 13th, J1, and this is equal to your debits are obviously higher minus your credits, and this is your 330,300. Go back and put 101. And now prepaid insurance is 10,400 on the 19th. On the 19th, in tab, this is J1, and this is okay, 10,400, 10,400, 10,400, and this is a debit. Go back and put 128, and cash credit is 10,400 here, 10,400, and that's the 19, and so this is going to be equal to this minus this, enter, and go back and put 101. Okay, now we go debit to cash, 20th, 20th. And debit to cash is 4,000. And it'll be 23,900 debit, and then go back and put 101. And now we have unearned fees, 4,000 on the 20th. Unearned on the 20th. J1, 4,000. CR, go back and put 202. Then we have cash of 15,600 on the 22nd, 15,600, and so this is going to be 38,39,500. And we go back and put 101. And accounts receivable credit 15,600, credit 15,600, and this is on the 22nd, J1, and you are left with is equal to this minus this, enter, and this is a debit balance. Go back and put 106. Then we have accounts receivable 3,800 on the 24th. J1, 3,800, and that will be $15,000. DR, go back and put 106, and service fees earned 3,800. So we will have 3,800. Okay, okay. And this will become, then what, the 38 is 35.8 credit. And this is on, okay. This is what date is it? It's 24th. J1, 24. J1. And we go back and put 401. Okay, withdrawals, 10,600. Yeah, 10,600. And this is on the 28th. 28, J1, J1, to 10,600. And this is a debit balance. And go back and put 302. And then we have on the 28th cash withdrawn. So 10,006 credit, 10,600 credit. And this is equal to this minus this, enter. And go back and put 101. And office supplies 3,400. Office supplies 3,400 debit. And this is when on 29. 29, J1. And this will become $5,800. So this is going to be 124. And accounts payable on the 29. $3,400 credit. J1. J1. And we go 201. Utilities expense 920. On the 30th. 920. 920 TR. Go back and put your account number 621. 621 and credit your cash by 920. This is the 30th, and this is going to be equal to this minus this, enter 278,980, which is going to be 101. And the last entry is wages expense 1,500. And we have this is going to be 31st, J1, 1,500. And oops, J1 tab 1,500, 1,500 TR, and we come back and wages expense is 613, 613, and then the cash, the last entry 101 is 1,500. 1,500. This is 31st. And we have here is equal to this minus this, enter. Okay. So now we have, now I'm doing all the steps I am supposed to do is on the 31st. So the first one I did here is the second step, post it. Then I actually want to see, make sure we have to do step number 3. This is called the accounting cycle. And if you can memorize this, then you actually know the sequence and you start to understand much more. So once I have refined my raw data from 30, 40 pages to 12 balances, I would now like to find out whether I posted them right or not, because I can't flip pages on this and try to see whether I balance it or not. So what we do is, remember something, these are my books. These are my records of the company. Make sure you keep this in mind. Journals, we have only one, but all journals, plus your general ledger. This is books of original entry, the first time you enter. This is the books of final entry. This is the last balances updated here. And in order to see if I posted it right or not, I will take a piece of paper. And this piece of paper is just for the accountants to facilitate our accounting cycle. Make sure you know that there is no other record of the company except these 2 books or different journals, plus your general ledger and subsidiary ledger. These are the records of the company. So you have to keep this very clearly in mind, because people don't realize that when they are doing this, this paper is not part of the record. This paper is part of my facilitation, so I can keep on moving from step number 2 to 3 to 4 to 5. So as soon as you do everything on paper, everything you change on paper will have to be recorded and posted. Otherwise, you will never be able to update your books. So this one is a paper, and look, this next page is a paper here. And then whatever we change here has to be recorded and posted, because I will show you the sequence. You notice here now, as soon as we leave this general ledger and we put this on this piece of paper. So we have 101, and this is tab, this is cash, and the balance of cash is 26480, debit 26480. So now the reason why I said I put these debits and credits, if they are not there and people are still learning, they will be confused as to where should they put this on this paper. And this is called, what is it called? Lodge Management Services. So I have to write this here. I mean, I gave you the date, but normally, remember this, that these dates you have to really write. So we will have it here, December 31, 2025. Oh, actually, I already wrote it here, so we don't have to write it. Okay, so make sure you write the name of the company on that paper, because any paper without a date or a name is useless. For how do we know? I mean, in a company you would know, but I mean, just saying it's the procedure we have. And so this is 106, and we have the account name. So you go one by one, you flip the first page, you write the number, you write the name, and you write the debit to the credit balance. Then you have accounts receivable. And you have the number, the name, and the amount is 15,000 debit. So you understand why I wrote it, and when people are learning, because they wouldn't know where this thing goes. So 124 is office supplies. And office supplies are 5,800 debit. 128 is prepaid insurance. And prepaid insurance is 10,400 debit. So you see, that's why we write this. I mean, A lot of you might know, but a lot of us, we basically, when we are learning, we can actually be confused. And the reason why I'm telling you this is because over the years when I've been teaching students, actually, if I don't write this, they don't really know. Even after this, they get a little confused. They say, well, which side do we write this? 163, office equipment. And office equipment is 68,000. Well, Lisa, we wouldn't have balance if I had left that same total here, okay? That's okay.
Okay, I just noticed I put my prepaid in my credit. I said, oh boy, so I went back and I just fixed it. I almost had a mistake there too, so.
Okay. So only write the ones with not the ones with zero balances, only the ones with balances, so that you don't have to be confused about it. So accounts payable, because some of those accounts I have put them because we will be using them under adjustments. So we got $3,400 credit. You see this here, and you go tab 3,400 credit, and then unearned 202, unearned fees, and that's 4,000 credit. And then we come back down to a large capital, 301, a large capital, and that is your a large capital is 106,000, is it? $106,000. Okay. So 106,000. So, I mean, I have it on the same page here, but make sure there are different documents, or I mean, pages of, this is a general ledger, this is a journal, and this is a separate piece of paper here, by the way. A large withdrawals. And that is your withdrawals is 10,600 debit. This is where you have to be careful. Okay. And we have insert down. Insert down. Okay. All right. So now we have 401. That is your service fees. What did I do here? Service fees earned. So let me write this. Service fees earned. So just make sure that you change it, or you understand anyway. So it's not really, because we only have one revenue account. And that is equal to 35.8 credit. Okay. And then you have only one more, and that is your utilities expense, 621, I think. 621. Yeah, the others are all zero. 920. $920. And so we should be able to balance this. Enter 149 too. Why is it a different?
Did we do the
statement?
wages? I think we're missing wages.
Oh, yeah. Okay. Cert. $613. Wages expense. And that is 1,500.
Mhm.
Okay, that's fine. Thank you. So we're now notice we're still going through, and you have to understand that we just summarize all the pages into these accounts, and then we found out that we balance it out. But again, I repeat, all this here only reflects the transactions which took place with external parties, customers, banks, the people we purchase things from suppliers, utility people, whatever happened. We have not completed everything which happened inside the company. It's only all this is the documents you have is only from the outside external parties we dealt with. So keep that in mind. And so it will make sure that gives you an additional understanding as to why we do step number 4, because just this trial balance, because it is balanced out, doesn't mean that everything is fine. And people don't understand until you tell them, look, all this we have are all documents for transactions with external publics. What happened inside the company, what was happening, we did not really record purposely because we did not want to have recurring entries. Means we did not want to write every day the same entries over and over again. So just keep this in mind, and I'll explain you again later on as to why step number 4 is done. So the first step is done because we want to get rid of all the documents. Okay, that's why. Where is it done? In the journals. How is it done? By debits and credits, double entry mechanism. 3 things: why, where, and how, and when, with the dates. So this is your first step we do. Second step, because this is raw data, I want to make sure I can summarize all this data into particular balances according to the chart of accounts, all the balances. Each account will summarize every transaction here, will be summarized in the account. That's what accounts does. They summarize all activities of the same nature into one place, and then you find this. So notice here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 activities actually gave me this balance. So now I can check as to whether all my balances, they balance or not, because I summarized them here, and I put that here. And I found, so second step was done so that I can actually summarize all the data into final balances from each activity of the same account. And then obviously, once it's posted, I have to make sure that I know that they have been properly posted, so they are balanced in the general ledger. To do that, so remember, why is this done? So that I can summarize all raw data. Where is it done? It is done in the general ledger. How is it done? It's from the general journal, or from all journals to the general ledger. We actually post them. And the posting procedure is you take the amount, you go to the account, you debit, credit, update the balance, you write a post reference and go back and put the post referencing in the journals as to where this entry has been posted or the amount has been posted. So that is again why, where, and how. Then we again get, why do you take the third step? Because I want to see whether I balanced, whether my postings are balanced or not. So I cannot really do it by flipping these pages. And so I take a piece of paper and I come up with a trial balance. And why it's done? So that I can see if I posted them right or not. Where is it done? It is done on a piece of paper. Why or how is it done? You take the first page of your general ledger, write the account number, write the name and the amount debits and credits. And once you've done that, it should balance. If it doesn't balance, so you should look up as to where your problem is or your mistake is. And once that's done, we are now on step number 3, but it's not over. Why? Because this does not tell us that everything is fine. Why? Because my aim is what? My aim is to find out whether I made a profit or loss in the month. So we cannot really just say, oh, now it's balanced, I can find out. No, you cannot. Because this is just with external parties. What happened inside the company, you haven't done it. And so in order to avoid writing your same entries over and over again, we leave this, whatever happened inside the company, we leave it at the end of the month. You understand? I mean, some companies do it every week also, by the way. But let's, for our purposes, once you understand what adjustments are and why it's done, that is the important part first. So you're saying, okay, this is balanced. So, but I said, no, there are things here, which actually have to be changed. Why? Because that whatever happened inside the company changed those, but we didn't change them yet. And so I take another piece of paper, and that piece of paper is called a worksheet. And I take this trial balance and I put it here. So why is it done? Because my trial balance doesn't have everything which took place within the business or inside the business. It's not there. It only has balances or transactions which took place with external parties. And because we know, what we do is we make sure we do not really do those entries every day, because it's just going to repeat the same accounts over and over again. It's for example, as I said, what accounts do you actually adjust? So you don't have to even memorize. You have to start from here. It says all supplies, all prepaids, all of our fixed assets or capital assets, all accrued revenues, all accrued expenses and entries. And we never touch our cash in our adjustments because everything has been reconciled here. That is not part of your adjustment. That is done all the time before you actually start your postings, or sorry, once you start to post, you have to do your bank reconciliation. And remember, if you don't do a bank reconciliation, your cash can never be right. Why? Because in your cash account, you might have an amount which you receive from a client, and you said debit to cash, credit to receivable, and you put it into your bank, but the bank, you didn't know that it was never collected by the bank. The check bounced, but your balance is showing. So you cannot have the right cash balance until you have reconciled it with the bank statement. It's a very important step to safeguard the most important asset of a company, which is cash. I mean, we deal in very small amounts, but big companies have 5-6 accounts like this with the bank, and they have specialized certain checks going in or coming out. And so we're saying now that everything else has been done, except now we are now left with the adjustments. And the reasons for adjustments is because all these amounts here are not correct. Why? Because they do not reflect the activities which took place within the business. So let us see, what activities are we talking about? And you don't have to really memorize. You can go according to this. All supplies, all prepaids, all fixed assets, and then all accrued revenues and all accrued expenses. Now, I gave you this, but it's not given to you. You have to find it yourself. So first thing, all supplies. Okay, I go to supply. You think you have $5,800? No. Why? Because this was an entry I made on the 2nd of December, right? I mean, do you think that I bought these supplies just to look at them? I actually bought them to use them.
Yeah.
And I did use them. So how come you're still showing $5,800? So I went into my storeroom and I checked, and I found out that my office supplies there lying on the shelves is 4,800, not 58. What happened to my 1,000 office supplies?
Used it up.
Used it
them
up. As soon as you say used it up, you know it's become an expense. So what is it that we are doing here? We're just transferring, adjusting the accounts, transferring assets which became expenses from assets into expenses. So the first one, you go debit to office supplies expense, A, 1,000, and credit your office supplies, A, 1,000. So what will happen? Look, this is a debit, this is a credit. At the end, it will become 4,800, right? And your expense will go up. So right here, take a look here. Right here, I have an additional expense of 1,000. So how come my trial balance was earlier? Cannot be right. That means my profit or loss is not correct from my first trial balance. I have to make sure that I adjust all these accounts. And again, the real reason behind this is all about getting your profit or loss right. Whom do you think you're fooling? Yourself, if you don't do it.
You need to do your budget, right? Basically, you need to know what your
Well, your budget will depend on your activities which you have been having. You see, budget is our forecast. We budgeted our forecasted on, like we gave you a trial balance, and they said, okay, now for income statement, you create a budget for but you have to get this first. This is actual.
Okay.
Okay. So if you compare 1 year to the second year, you say, okay, look, from last year to this year, the increase was this, but now economic conditions are that the increase could be even higher. And companies, they don't want to be caught at the time when it's actually bad, when they cannot really raise money. So what they do is they have a budgeted income statement, forecasted income statement, and so that when they need money, they can actually they've already arranged for that. So here, office supplies, we are done. So this is actual, by the way. And then, so this one is done, all supplies. Now prepaids. So this is 10,400, and we calculated that the insurance expired for the month is $200, even though they're all calculated. Maybe my numbers are not. You see, like it should be $2,400. You understand? But it could be for more than a year. You know what I mean? If 52, maybe it is. This is for some number of months, so that it's like to 52 months, for example, or 25 months or whatever. It can be a policy for more than, but we estimated by calculation that the insurance expired is, you see, so here, let's say here, this is 10,400, yeah. 10,400 divided by 200, okay? And so if you do that, so you will get 52 months of insurance. You understand? So for 1 month, we calculated it's 200. So it has become an expense, 200. B, 200. And B, credit, 200. So if you notice, at the end, when we put it under adjusted trial balance, debit 10,004, credit 200 will leave you a debit of 10,200. 5,800 debit, 1,000 credit will leave you a $4,800 debit. You understand? So automatically we are looking at, look here, I already have $1,200 of more expenses. So how come we could not really find out our income or loss, profit or loss without doing this? Because then you are fooling yourself. You don't know exactly what you're doing in accounting. So all these reasons you have to sort of absorb in your mind in order to, and then I will again repeat as to how what are the accounts which actually calculate your profit or loss. You have to make sure you keep that in mind, because otherwise the understanding is not really very good, in the sense that you're hazy about it. Now, so we're done with supplies. We're done with prepaids. Maybe we'll have rent again, but then we have fixed assets. And you see this $68,000. Okay. Now, this $68,000 machinery or office equipment, we estimated, okay, that it will actually last us 68 months. Okay. So if it is going to last us 68 months, so 68,000 divided by 68 is equal to 1,000, right? So notice we are actually, oh, sorry, maybe 34. No, sorry. How much is it? 2? Yeah, 34. It's going to last us 34. That's how we got 2,000, okay? If you're wondering, every one of them are calculated, by the way. They're not just given to you. We actually make sure they're close to your actual operation there. And so you will have your depreciation expense here, C, 2,000, and accumulated depreciation credit, C, 2,000. Now, I would like you to make sure that you understand, don't ever put any adjustment against the fixed assets actual account, because I don't know if you remember this, we always have a contra account of all fixed assets. For example, office equipment, accumulated depreciation, office equipment, machinery, accumulated depreciation, machinery, buildings, accumulated. Why? Because we don't want to reduce the original cost of those assets. Why? Because when people look at our company, they should actually see how much office equipment, how much machinery, how much, because if you do it directly, after some years, 68,000 would probably look like 24,000, no? After a few months. And so people will look at it and say, oh, their office equipment is very small. So they're not really very big company. You understand what I'm saying? So what we do is we keep the original cost. We actually, whatever we have used up here comes under accumulated depreciation office equipment. For each one of them, it will be like, and so it will be, so what is the book value? Means in my books, the book value of this office equipment is 68,000 minus 2,000. That's what we call book value. So it's 66,000. But if I put it directly here, it will become 66,000, right? And the next year, 64, and the next year, 62. And so somebody looking at it and say, hey, they don't have much. After 10 years, you will be left with 48,000 instead of 68,000. So what they do is they keep the original cost as is, and they actually put whatever use you have used up the portion, because don't forget, all assets here, all assets are there in order to be used by our business. So some of the expenses are prepaid. These are all prepaid expenses. Take a look. I pay them first, then I use them, right? I pay them first. Some expenses, you use them first and then you pay. For example, heat, light, and power, sometimes even rent. There's a lot of things. Now, if I didn't buy this machine, I leased it. So I will not have these two accounts. What will I have? Leasing expense directly. I don't really care. I just pay every month. But companies always buy assets because it's cheaper for them, because leasing is more expensive. So what they do, they want to make sure it's proper. They can show the accounts properly, and so they put the asset cost separately than the use of it every year. Out of this 68,000, we estimate that it is used up every year by $2,000. Okay. You see, it's like buying a car for a company. When you bring the car and you use it for a month, that value cannot be that, right? So you have to make sure that you reduce the balance of this by the amount of the usage, which becomes your expense. All assets, or not all, most of the assets are fixed assets, basically, are used up in the running of the business. And so you can charge it as an expense, because whatever you make, the government says you can deduct everything you paid in order to get your revenue, and the balance will be taxable. So this is 2000 and 2000. Anybody has a question, you can ask me. So we have supplies, prepaids. I think there is one more prepaid, which is rent, but we'll come back later on according to depreciation is done. Accrued revenues for service revenue, $1,000. Now, what happened here is the following. Somebody asked me to start the work on the 15th and said that they will pay me $2,000 on the 15th of next month. Okay. This is the 15th of next month, January. But on I'm here on the 31st. I found out that I have actually finished half of the work. The client told me that they will give me $2,000 for 1 month. On the 31st, I found out I have finished half of it. And for that, I will receive the money later. So what do you call when you have will receive? What do you call will receive in accounts? Anybody? Will receive. Pardon?
Unearned, no?
No. Will receive, not unearned. Unearned is I got the money.
Okay, so it's what they're getting services. Okay.
Will receive. Here. It says will receive, no?
Accounts
Account receivable.
What do you call will pay?
payable.
Accounts payable.
Yeah.
So here on 31st, I did have the work and I will receive the money later on. So all you do, but you have earned your revenue now, but you cannot really let it go. Why? Because this revenue was earned in this month. Again, I emphasize the word revenue is all cash received or to be received from the running of the business, right? Expenses is all cash paid or to be paid for the running of the business. So logically, if you think, how do you calculate your net income or net loss? Cash coming in minus cash going? Cash coming in from the operation of the business minus cash going? Out, no?
Yeah.
And the difference is, so if $100 came in from doing your services and you paid $50 for insurance, for wages, for whatever, what's your profit? $100 came in for service revenue and you paid for wages and everything $50. So what's your profit?
50.
Huh?
50, no?
Yeah.
It's 100 minus 50, no?
100, yes.
Before
That's
tax
what I'm asking
or after
you.
tax? Mr. Tarek?
Yeah.
Before tax or after tax?
No, don't worry about the tax. I just stay with very basic. I just want to
So it's
make you
50.
understand what's a profit or loss. It's not really the tax. The tax problem is a huge problem that we don't want to.
But now is the tax season, that's why.
No, I know, but I'm just looking at. So you got 50. I just want to explain to you when you are looking at your profit or loss, how do you calculate? If you do not know I keep on repeating. If you don't know the definition of the word revenue and your expenses, then you will not understand as to what we are doing. This account, fees earned, represents what? It represents cash
Sale
Cash coming
from sales or services.
into the business from the operation of the business.
Yeah.
You see, people have difficulty, very difficult time to define for me, even if I tell you 100 times, that if I ask you, how do you calculate your profit? What would you say not in accounting language? How would you tell me?
What's the money that you're bringing in?
Your cash coming in and cash going
Out.
out
Your
only
expenses.
from the operation of the business, not from my own pocket, not from a bank borrowing money. No. This word here, this account here, it represents, the balance in here represents that this is the cash I received from giving services, not cash coming from the bank, borrowed from a bank or from my own pocket. That is all in my cash account. That's why we don't take cash to calculate your cash account, the account called cash. How will you find out in the cash account what's your profit or loss? Impossible. You have cash coming which you deposited. You have cash coming you borrowed from the bank. You have cash coming in from the services you have. You have cash which you paid for purchase of your assets. You have cash you purchased for the expenses, and there is no way you can find out. So what do? You give names. Follow this. You give name. These are accounts created which belong to owner's equity. Otherwise, it's very easy. I can debit cash, credit capital. I can debit capital, credit cash. That's not going to give me my profit or loss. That's not going to even tell me how much did I receive from the running of the business, how much did I pay for whatever I pay for. It's impossible. So what did we do? We said any cash which comes in from the running of the business, we will debit cash, but we will not credit capital. We will credit
Your expenses or your operational costs.
service revenue. Any cash which we pay for the running of the business, we will not debit capital and credit cash. We will actually debit the expense and credit cash. So now I'm okay. Now I say, look, I have everything I need for the operation of the business. That's how I control my business. These accounts only show my liabilities. It means how strong or weak my company is financially, not profit or loss. So if you notice here, what I'm trying to do here is I'm trying to make sure that my revenues, costs, and expenses are adjusted for 31 days. That's all. Otherwise, you don't get your profit or loss. I mean, you see this? This is your trial balances. How do you think you can find out your, look at this, 00000. You have more expenses. There's an expense of 2,000 here, 200 here, 1,000 here. And now you also have additional revenue, accrued revenues. I have $1,000 revenue, which I will receive, which we call accounts receivable, no? And credit your service revenue. You finish the work. So that value should be, otherwise, take a look. You will understate your revenue by 1,000 of this month, and you will overstate the revenue of the of next month. This is accrual basis of accounting. Accrual basis is required by the government when you file. And what is accrual basis? You have to record all revenues in the time period in which they are earned. Remember this, when in the time period in which you finished it, not when you received the money. You have to record all expenses in the time period in which they are incurred, no matter when they are paid. So you cannot say, oh, because I did not pay for them this month, I will record it next month. No, but your expense was for this month. You know, these utilities, there's a bill, $920, which came on the 31st for the month of March. And you say, well, they said I can pay next month. So I'm going to record next month. Why? But the expense is for this month. How can you transfer your expense of this month into next month? So in accounting, we have a way. Debit your utilities expense and credit accounts payable. That's all. Or whatever, I mean, when we adjust it, that's what we do. So up till now, this is accrued revenues. Now we have accrued expenses. What is accrued expenses? There are wages. So take a look here. Wages are paid every 2 weeks, for example. We paid the last wages on 28th. Then the people worked for 3 days in this month. But this is going to be paid next month, right? And once you get the hang of it, it's the same thing. Debit your receivables, credit your fees earned, okay? Debit your expense, credit your accounts payable or wages payable. It's just the opposite of the way we do. To be paid, you see, I again said, when I said to be received is what? Accounts receivable, you said. To be paid is called accounts payable. But here we don't call it accounts payable because accounts payable is an oral promise to pay for merchandise purchased. So we open an account called, because it's a very different account. What is it called?
Wages payable, the accrued,
So what do? I don't, people seem to understand, oh, this is a very important. Yeah, it is, but that is not as important as your wages expense. Because that calculates your profit or loss, not payables. I just said, I need 31 days of revenues and I want 31 days of expenses. Otherwise, you don't know what you're doing in accounting. And you don't know you're doing this hodgepodge. Oh, yeah, it's okay. It's only 3 days here and 3. No. Just imagine here, wages. I have 100 workers. 3 days wages. That's a lot of money. So the importance of adjustments is very, very important or very crucial in getting your net income or net loss done properly. We don't really do this because we like to do this. We do this so that we can get a real handle on actual profit or loss for our company. So the whole idea about adjustments is not because it looks good or whatever. No, it's such an important step. If you don't do this, then your income statement and your balance sheet will not be right. Take a look here. You see, it's 15,000. It's going to be 16,000 now. This here is 5,800. It's going to be 4,800 now. So balance sheet also is affected. Of course, they're both interconnected. Okay, so how much is my accrued wages? 500. It is going to be paid. This expense is going to be paid. So wages expense, here you go, 500. And to be paid is called, wages to be paid is called
Payable. Wages
payable. Yeah, just look for the account. You remember in the last adjustments we did, we had that. The last course we did, we had the wages payable, remember? Your year-end tasks, we had a whole lot of adjustments there. And one of them was wages accrued, 1,500 or 1,200. So now debit your wages expense, credit your wages paid. Okay. Balance in unearned fees should be 1,000. Again, so we have somebody who came on the 1st and gave us $4,000, right? Somebody came, gave me $4,000, right? And
Yeah,
said,
it's like down payment.
yeah. So and the guy said, could you please do this work for me? Okay. Well, and take a look. They said until what day? Here, receive 4,000 for the work to be completed by
January.
2026, next month, right? So you started the work today, here on the 20th. So if you started the work today, that means you must have finished part of it, right? And how much did you finish?
$3,000 worth.
Balance in the unearned should be?
So you did $3,000 worth.
That's right, exactly.
Yeah.
So you go debit to your unearned, okay? This is very tough. A lot of people have difficulty. So debit A, B, C, D, E, F, 3,000. And credit your fees, service fees earned, okay? I will change it to service fees earned. That's what we have there, right?
Like this, that it will be a little bit difficult to remember. It is revenue. Yeah.
Okay, no, I know. It's service fees earned, so you can actually, because it's one cell, normally they increase the size of the cell. I can actually go, but we can just write 3 plus 1, 4 together. So we can write D and F. $4,000. 1,000 is already there, right? Here, let me see. Okay, DNF 1, so it's going to be 4,000. Good? Or do you want me to do this?
No, that's good. That's
Okay,
good.
all right. So we're balanced out here, and rent expired 3,500. So debit your, obviously, your rent expense here, rent expense here, EMG. And this is 3,500. And credit your prepaid rent 3,500. Okay. And look, if you didn't do this, your income or loss, your profit or loss cannot be right. You understand what I'm saying? It's basically you don't really follow your accounting properly, so you will not get the good results. 1,000, 4,000, 6,000, 6,500, 6,700, 7,700, and this is going to be 10,000, 11,200. Could you please see if this is right? Well, 47, 67, 72, and 4. Yeah, 11, 2. Yeah, good. Everybody's happy?
Missing.
Yes, no?
Yeah, no, I'm missing my deeds. Okay, I put it in, I put it as a wrong one. I put it as a credit instead of a debit.
Yeah, we can make sure all your expenses are debits.
There is any way to audit if we did any mistake while doing the internal adjustment, or
Yes,
Just-
yes,
okay,
yes.
just in case.
Because if you
How?
don't balance here, then you're
Yeah,
wrong.
just in case we don't balance, but there is like something to figure out.
No,
where is-
no, no.
mistake?
It's your own understanding.
Yeah,
That's why we do manual accounting, so that we pick up our mistakes at the when we are doing it.
yeah. When you will repeat the mistake, we'll be able
Yeah.
to fix.
Yeah, I know, Sama. It's basically, that's how we refine our understanding, that's all. Okay, everybody's fine here?
Yes.
Okay, now, the extensions. So go start from here. 26,480, put it here. 26,480. Okay, next, 15,000 debit, 1,000 debit. What do you get?
See,
16,000 debit. This is exactly how you update your general ledger. Remember, okay, there is $5,800 debit. $1,000 credit will give you a debit of 4,800.
1,800, yeah.
Yeah, good. Everybody's
Yeah.
okay. You can stop me and I can explain to you again if you want. 10,200, 7,000, 68,000. Do not miss any numbers here when you're going here, even if there's no adjustment. So 2,000 credit will give you 2,000 credit. And we learn this as we go. If the more you do it, the more you learn it. 3,400 credit. Now here, 4,000. This is where people get confused. This is a credit. This is a debit.
1,000.
1,000 credit. Credits are higher than your debits. And a lot of time people get confused with that. Wages payable 0 and a credit of 500 leaves you 500.
500.
106,000, 106,000. 10,600.
Yeah.
Then 35,800 credit and a 4,000 credit will be 39,800 credit. And then you can be sure everything else is debit. Debits and debits. Good. Okay, so, and here we can actually see it should balance. So Osama, you have to see from here if
We
you did it
didn't
right or
tally.
not. Okay?
We didn't tally. No,
So-
all good.
All good. No, but I'm saying this is where you'll find out your answer. So everything.
Basically, all my exam, I'm not tally.
Well, it's a matter of just doing it a few times, and that's how we learn. Okay, so now, once you have this, this is where you have to make sure that once this balances, this is the right balance. You have to now make sure that this is what I use for profit or loss. And I would like to make sure you can memorize it. Income statement accounts are all revenues, costs, and expense accounts. Starts with 400. So where will you start here? Starts with the 400 numbers under income
The
statement.
second part.
Pardon, this one?
Second part.
Can you
yeah.
repeat that?
Income statement accounts are revenues, costs, and expense accounts. So where do I start my extensions from here? I want this adjusted trial balance now to be extended under income statement and balance sheet.
We're
Because
going-
this is a combination of assets, liabilities, owner's equity, revenues, costs, and expenses. Your income statement doesn't include all of them. It only includes which ones?
The pure operation from revenue and expenses.
Yeah, revenue and expense. So when I extend, where do I start? Which account number?
We start row number 19.
Huh?
100,
Revenue. Where does my
400.
revenue start?
400.
400. So what
400.
is my first account to be extended here?
Service fees,
Which is, yeah, so that is 39,800. Second one, be careful. 2,000, 2,000, 200, 1,000, 3,500, 920. Good. Everybody okay with this?
All good.
All
Can you
good.
repeat it here, please, Mr. Tariq? Why you start from here?
Well, revenues, costs, and expenses. Tell me, where does my revenue account start? By now you should know.
Okay.
Here, look what I did for you. I've been doing this all along. You've been doing these for me. Revenue accounts are starting with what? What number are revenue accounts?
400.
So, I mean, I don't think you have to worry about if I said, where do I start my accounts for income statement?
Okay.
400, right?
400, yeah.
So, and then don't start looking here. Only look here.
Okay.
So 3,900. So what did I do? I put this here and I put all of them here, right?
Okay. Yeah.
Now
Okay.
give me my totals, 39,900. And this one is enter. If I ask you, what is the profit or loss of this company? How would you tell me? If I told you, tell me what is the profit or loss of this company, how will you tell me?
The balance
It would
between
subtract.
Pardon?
the subtraction,
Yeah, but which account minus what accounts?
total revenues, whatever
Yes,
account.
minus the total expenses, right? So
Yeah.
if somebody asks you, what is this 39,800? You see, these are the things you have to make sure that you know how to explain to people. What does this 39,800 mean?
Is the total income or revenue.
No, it's the total cash received or to be received. This is what I keep on telling you. And it's all on my notes I gave you before. Definition of revenues, costs and expenses, assets, liabilities, owner's equity. Otherwise, you can't understand what is this income statement. Why would you make an income statement? To find out what?
How much cash we are going to
How
receive.
much profit or loss you made, right?
Yes.
So if I ask you, you do business, tell me, how do you calculate your profit or loss? It's exactly this. How much cash came in from services?
39.
39,
800.
800. How much cash went out to earn this 39,800?
620.
9,620. So is it so difficult? It's arithmetic for grade 4. Tell me my profit or loss.
Yeah.
Pardon?
30,000.
Yeah, okay. So no. 39,900 minus.
Minus
39,000.
9,620.
Yeah, so give me the total again.
30,180.
30,180. Put that balance under the smaller amount. Put that difference under the, take a look here, what I wrote.
Net
Can
income.
you see this? What did I write?
Net
Here.
income.
Net income. My cash coming in is higher than the cash going out. And then add it and balance it. 39,900. 39,900, right?
Is it 39,900 or 39? Why is it 39,900?
Oh, 8, sorry. You're right. No, it's here. 8.
Yeah, she don't have my glasses. I cannot read it.
Here. No, I saw that up there. It was me. I had written 39,900. And here. Okay.
That's why I keep on moving my glasses, because I got the bifocals. It makes it
Maybe you
easier
thought
to
your
see.
glasses are no good. It's
Then
my
I-
glasses, okay? It's my eyes. I don't- So that's why, you should do it with the sum of Excel, so that you don't make. So now notice, that's why this is written here.
Yeah. I
What's
have a
left
question,
now?
Mr. Tariq.
What's left now is your balance sheet, right?
Yeah, I have a question before to go.
Sure, go ahead, go ahead.
Where is the P&L account in this formula?
This is your P&L.
This is the one.
Let's the profit or loss is called net income or net loss. You can, if you want, you can write it here.
P&L.
Okay.
Yeah, but actually, because
I know, Osama, because the old name, that's why I keep on saying profit or loss, because, and then people say, well, but this is net income. It's the same thing. Net
Yeah.
income or profit or loss, okay?
no,
Net income or net loss.
to be more specific in my question, Mr. Tariq,
Yes, go ahead.
when I want to make or to have to understand the difference between the income statement and the PLL, that are the same or are different?
No, it's the same.
Are the same. So
Income statement is an income statement is the new name. P&L is the old name.
okay, that's what.
Okay.
Here,
Yeah.
here.
Here, Osama, this is P&L statement.
Mhm.
Okay. You can write it there if you want. In
No,
brackets.
okay. Now it's clear for me.
Oh,
But I was
alright.
wondering in what stage that we have the PLL.
No, it's fun to see things which we miss, okay, or maybe we know, but we don't
Yeah,
really
it
know
was.
with these new because maybe some countries use differently. You know what I mean?
It was like 30 years ago.
Okay. So I can understand why you're saying P&L statement. You know, when I say here, take a look, when we will make income statement is here. Okay, this is P&L statement right here. That's a piece of paper which we actually make from here. And that is basically what is sent to the banks, sent to the people or the owners and the management. These are the two or the papers which we send. Okay, I mean it's a very small one I made, but so here, this one shows you your profit or loss or P&L. Okay, those of you who are wondering, if you hear the word P and L here, that's what he says, P and N. Okay, what is P&L? Profit and loss. So this statement, when we make, sometimes it used to be called profit or loss statement. So profit or loss, actually, P or P, and we call it P&L. But so everybody's okay with this?
Yeah.
If
Yes.
I again repeat, if I don't emphasize the definition of revenues and expenses, you cannot understand this, what we are doing. I keep on telling you. And if you have a confusion, it represents what does revenue represent? The revenue in account with a balance. This balance represents that this is the cash I received or I will receive from the running of the operation of my business, which is giving services, not any other money which you receive from banks or from my own pocket. And this expenses are the cash I paid for the running of the business to earn this 39.8, and in the process I made 30,180. This 30,180 is the amount which is going to be taxed, not 39.8. 39.8 is your gross revenue, which we call service fees earned. I keep on telling students, I said, what if somebody says, what do you mean by this 39,800 service fees earned? They don't know, they cannot answer me. After repeatedly saying that this represents the cash received, look, this cash here does not tell me my profit or loss. Why? Because in here, there is cash I contributed, right? There is cash I borrowed from the bank. There is cash which I received from the running of the business. There is cash I paid for my assets. There is cash I paid for my expenses. So how can this be my profit or loss? Look, the balance is lower than the money I made. You know why? Because I must have paid for other things from there. So it does not have to be the same. And so this is what you have to understand. Cash coming in strictly from the operation of the business, not from the banks, not from my pocket. Cash received from the running from working or what I do, and cash paid for earning this. I had to pay all this depreciation, wages expense, insurance expense for to earn 39.8. So the difference has to be my profit or loss, right?
Yeah.
Now, balance sheet shows, again, you can go take a look again. I'll actually upload the notes again. But balance sheet shows the financial strength or weakness of a company as of that date. This is over a period of time of 1 month. This is what we did. Here, as of today, 31st, this is my balance sheet. Means what are my assets, what are my liabilities, what are my owner's equity, and it shows whether my company is financially strong or weak. You see, it's like here. My assets are 100. My liabilities are 10. And my owner's equity are 90, right? Because my assets are equal to liabilities plus owner's equity, right? Now, this is one company. There is another company, similar, and this company actually has this 100, and their liabilities are 20, and then they have $80 as owner's equity. Which company will you be more interested in investing?
The first one.
The first one, because the liability is less, right?
Yeah.
So this shows you then the financial strength or weakness of a company, no? Balance sheet shows you the financial strength or weakness of a company, correct or not?
Correct.
It's because I just gave you a very basic example. Which company is better? Okay, number one, because their liabilities are 10. So 20% of this company here, number two, is owned by outsiders. 10% of this company, you see $10 over 100. You can calculate it. $20 over 100, because total assets are 100, owned by creditors plus the owner. So right away you can calculate the percentage on. Okay, so here we have now. So all you do now is we will just complete this and then we'll do the other part next time. But balance sheet. So now extend all the way till 302. Okay, and do not, you make sure that your debits and debits are. So I mean you can also do this. Copy and paste. Okay, now do the go your sum so that you don't make a mistake. And I again repeat, in order to find out, Osama, you wanted to know that if in order to find out whether you're right or wrong, your difference between these two columns should be the same as the difference here, because we split this balanced columns into two columns, right? Tell me what's the difference between this and this. Calculate it.
The same amount of profit and loss.
Everybody calculate it and then tell me. 143,080 minus 112,900. What do you get? You have to do it to believe it.
We trust you, Mr. Tariq.
You
So-
get the 30,180.
Okay, always put the difference. Hear me out. Always put the difference under the smaller amount. This is a debit, this is a credit. And then balance it out. 143,080. 143,080, right?
to remember this again. It's to remember all the parts.
Yeah, I know. So take a look here, balanced, 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 balanced. I'll see you tomorrow.
Thank you so much.
So
sir.
tomorrow we will continue with this manual entry, or we will start with the.
No,
system?
you still have, I still have to finish,
Okay.
okay? Because you will get again the same, so you can repeat. I don't want to finish it today because it's going to be too much. You will not remember everything. So.
We have to memorize too, sir.
Yeah, sometimes it helps you to memorize,
Yes, exactly.
and then, but you can download those the notes and you can start reading once in a while. You will see it's not that. It's just unless you keep on reading these things, you will not get it. It doesn't come in so easy.
Your
Yeah.
teaching methodology.
I mean, you know, I did this first time when we started the class. That's why I'm doing it, because it's you don't understand the whole process unless you have done it few times. And you can again do this because you have the answers. You can again do it and see where you're doing it wrong. In case if you later on you need it, you can always use this. Okay. Yeah,
Did you,
have the.
did you,
have
Mr.
the-
Tariq, uploaded it? Because
What?
to repeat doing it, this problem,
It's up there.
is it, do you upload it to the team or not?
Yeah, it's shared. No, take a look.
Yes,
I
it is.
checked, but
I've
I
seen
didn't
it.
find it, so.
It's in
Under
the new
share.
file.
Check under shared. It's according to the date.
Okay,
I put a date there.
okay.
I mean, it's in a folder. Samia, you have to open the folder, no? I give the date. It's March the 26th. Is it there? I'm sure it's there. I uploaded it.
Okay, I'm gonna check. Thank you.
All right.
Mr.
Yeah. Yes. Okay. So everybody happy now? I want all of you to be happy. Don't worry about it.
Very happy, very happy.
I'm always there. Okay.
How are you, Tariq?
Yes, Abdul Wahid, what's happening? You're coming late, man.
I was here.
I'm just joking. I'm not worried about it.
No worries, no worries.
Everybody is okay? Everybody is healthy and everything? That's all we need.
Yes, thank you so much. sir.
Tariq, at the end of the class, I need to discuss something with you.
Okay, all right.
Thank you.
Okay, everybody else, you can actually leave. I will see you tomorrow. And I'll talk to Mr. Abdul Wahid Ahmad here.
Yeah, please.
Thank you. sir. Thank
Okay.
you. Thank you.
All
Thank you,
right.
sir.
See you
Good night.
tomorrow.
Thank you, sir.
Thank you.
Thank you, sir.
Bye.
Good night.
Bye-bye.